Are you tired of using one time frame in judging the market? Are you tired of just analyzing the market with just one time frame and it's becoming very ineffective for you? Then this video is for you. Welcome back to the channel. It's your boy Michael Honora from Empire Trading, and today it's another video. We're talking about time frame analysis and how to properly use time frame analysis to improve your trading in general. So time frame analysis, as you all know, is the using of analyzing markets with different time frames simultaneously to depict a particular market direction or to make better decisions. You understand? You know, there are different types of traders. They're like the intraday traders, they are the swing traders, they're the position traders, they're the scalpers. So people fall into different categories in this type of trading. There are scalpers, people that just use the 1 minute, seconds, 5 minutes, they don't, or 15 minutes, they don't bother coming back to the daily or the weekly. The intraday traders, people that just use the daily time frame, 4 hourly time frame, 1 hour time frame. Then position traders, people that use weekly time frame, monthly time frame and all. So but today I'll be showing you how to integrate all these time frames to improve your trading in general. I'll be showing you how I personally use time frame analysis, how I analyze the markets and judge market sentiment from the monthly to weekly, daily, 4 hourly, 1 hourly, 30 minutes for entries, 15 minutes for entries. So without further ado, let's just head straight to the video. So guys, this is the Euro USD chart and is a monthly time frame. So let me, like, if I'm meant to analyze this market now, like the normal market scenario, my direction, how I am like judging the market movement and sentiment with this high time frame. So this is how I'm going to do it, right? As this is monthly time frame, first thing I'll be wanting to see on the monthly time frame, as is the monthly time frame, I would love to plot out the monthly highs and lows. Firstly, monthly highs and lows here. This is the first one. The second one is here. So this helps me just guides me in the range market is trading. Okay, the high it created last month, the low it created last month, market can just easily spike to those lows and highs and create opportunities, right? So I have this range already. This is my monthly range, is the monthly highs and lows. That's the first thing I do in the monthly time frame. Then you move down to the weekly time frame. What are you looking at the weekly time frame? You just look for key areas here, key support and resistance area. Not too much, just you can find support and resistance area. Like firstly you can just see this whole, turn this off. You can see this whole supply area here, or your support and resistance area on the weekly time frame. Why do I call that a strong area? You can see that firstly market used it as support, right, and created this large high, something like this, and created this large high, right, and it came back to it again, formed support, traded high, and it's coming back to this low again. That's resistance level, that support level. So now I can depict that this whole area, this whole price region here, it's a very strong, it's a strong weekly area. So our advice, the cleaner your chart, the better for you. So you won't want to put a lot of lines everywhere, you want to put a lot of objects everywhere, because it's actually reduces the vision and it reduces the tests you get from the chart. You understand? So you just want to make your chart clean, having the inner information in your head, right? So now you know that around 1.050 region, it's a key area. This is on your weekly time frame. Then you can come back here and plot another one. If you can plot to, this is the first another one. You can see price is this as resistance, broke trees as support, resistance. So you can really depict that this is a very nice key level. So sometimes what I do is that I just round them up to like a psychological number, so that I can understand that market is trading from this region to this region. So this is 1.07800. So these are two weekly levels. So you move down to your daily time frame. You understand? Now on your daily time frame, that is where you should now be majorly focused on, because you want to take trades from daily, from 1 hourly, days movement and stuff. So now on your daily movement, what you'll be looking at, daily highs and lows, probably supply and demand areas on your daily time frame. And most times these supply and demand areas on your daily time frame could be support and resistance areas on your weekly time frames. You understand? So both of them just tend to synchronize, right? So if you come down to your daily time frame, you can plot out supply and demand areas. You can see, for example, here now, here price created a low, then pump up and created highs. So this whole region that price started this whole pump for, this whole region is a key daily demand area. So you want to have that on your back of the finger. So you can just actually just plot. Most times I do plot them like this, but sometimes it can be actually messy. You just have too many boxes, but you just have to make them simple. You can see how price tapped into that area, right, and formed a double top. Actually even taps in that area again and is already reacting from there. Now you already know that why this level is very, very rigid. It's one of your I think it's one of your this monthly. Okay, I made a mistake. I was meant to make this thing actually a different color. Let me just make it monthly is usually black. We'll change it to possibly green. So my monthly time frame, monthly highs and lows is probably it's green, right? So now I already know that on my weekly time frame, this is a key area. This is a nice key area on my weekly time frame, right? And this is also my monthly low, if I'm not mistaken. And yes, this is also my monthly low. You can see two confluences already lining up to show the validity of a level. And what you want to be doing, right, is actually having to know how valid a price level is for you to take trades from. Okay, personally, this is the way I approach the market, and sometimes I do predict price levels from point A to point B. And for me to predict that price level from point A to point B, I don't just come and look at one time frame. I might have seen different time frames lining up themselves and telling me that, okay, this is a very key and very strong area you should be actually looking for. And that's why I'm sometimes confident taking some certain kind of risks on those kind of positions, like going in 2% risks without even minding, or going in 3% risks without minding. And all I just need to do is just keep my stop loss, keep my take profit, and just go to bed. And that is what you should be doing, right? So now on this level, I already know that my monthly lows is around here. This was around 20th of February. Yes, this was around my monthly lows. Yes, my monthly lows were around here. And this is also my weekly key area, right? There are a lot of stocks I see by myself personally that I won't want to give out to the public like that. So, but after doing your personal research and a lot of homework, you can just find out those stuff for yourself. But I'm just sharing you the basic ones that I think could help you in your trading, right? So if you see now, the first touch here, price spiked above, respected this monthly low, which is also a weekly level, and went up and came back again, used it as a support, created a high, and came back again. Now what should you be expecting? We're already seeing that Euro USD should be pumping up. Euro USD should be pumping up, so we should be having this maximum target here, like something like this, impulse now created a high. This is a correction, then another break to the high. So I already have this whole move already in my head, and this is what Euro USD want to do on the weekly time frame. Now we come to the daily time frame, and what are you looking out for in the daily time frame? I'm just looking out for possibly monthly daily supply and demand areas, or daily highs and lows that you can just plot out from the market. First off, you can see now that this is daily demand area that price spiked into. This was a very good position. I think I was unable to take this buy because I think I had really passed my phase one then with this sell. So getting the live, I wanted to start the next week, and you can see how here was a very nice buy opportunity. Clean. You already know daily is lining up with your weekly and your monthly. You have this in your head and you have that confidence. Now it's how price spiked back to this area. Now as price spiked back to this area, you can see the movement to the upside, and this is a potential buy opportunity. Clean as you like. Now I have this intra-weekly time frame analysis where I'm already seeing that this use that support, broke, use that resistance, and we love price to come out straight to this area. But before then, what can I see on the daily? I'll just plot out my daily areas here. You can see this nice 3 pin bar that this 3 nice 3 pin bar that price just did the first, second, third, and evening star. Rather, I just call it evening star. Then you come back to my 4 hourly, and what am I looking for now? Right now, this is it. This is the time frame I use the most. 4 hourly, they are DM and hourly. I judge my intraday analysis from these time frames. Now 4 hourly, what am I seeing on the 4 hourly? Now you can see the price actually dropped in a very nice momentum. This was fundamentally driven, like yesterday was fundamentally driven. I don't even know, this is just fundamentally driven. Probably news that just came out and everybody just said it and transferring their profits to break even or safe haven currencies. So you can see how markets actually swept down, and after a momentum pushed it down, so you should be expecting corrections, like you should be expecting some corrections like this, up down up down up down. So this was a potential opportunity already. See, sometimes when you want to like make everything simple for you, you can actually just box out that area. You can box out that area like here. Now price is sitting on, remember, price is sitting on a monthly and a weekly level, so you can plot out this area to make everything simple for you, and you just take your trade position from there. If you already have this inside that price actually actually have to correct and correct an impulsive move, like an imbalance or stuff. So you can just take this as a correction, and you found a very nice 1 2, and just keep it below the low that you printed, and nice 1 2 3, or this 86 pips, just the correction. So this is a trade opportunity here which I have judged from the weekly time frame and daily time frame. So down to the daily time frame, what will I be looking at now on daily time frame? Now understand something, I am actually reading what price is doing, and I'm not reading it in an indirect way. I'm just reading price action from the monthly, weekly, now down to the daily, and reading all these time frames and having everything backed up with this time frame still makes your trading very, very profitable. So sometimes now sometimes you might be selling on a monthly support, it might just hit you out, and when you be selling on a weekly support, it might just hit you out, and this help you even judge entry and exit points in the market, long-term entry and exit points, right? It's a very simple strategy, it's something you can do. And so now on the daily time frame, what am I seeing? I've seen this evening star, first touch, second touch. I just take out this floor here. If I just take this floor here, I have this as my first daily area. Then I move on to my 4 hours to analyze that area. And what am I saying on the 4 hour? On the 4 hour area, you're still looking for supply and demand areas on the 4 hour area. So you're looking for those nice bearish candles before a drop, or bullish candle before a pump. Bearish candle before a pump, or a bullish candle before a drop. So first off, I can just plot out this already. Now I can plot out the price upon price trading, pulling back and everything, coming to reach here. I will be willing to take a long or a short position back to where price is like back to any region at all, right? I don't just come, price don't just come here and I short. I have to see confirmation still. That's when I have to enter the 30 minutes, 15 minutes to just find good entries, you understand? So no one puts it out. You have to wait. I just have to wait to see price reaches this area for me to like judge my sentiment. And I love something in the market. What I love the most in the market is market actually coming back to form a second leg before a big move to the upside. But you can see right now Euro is just actually like pumping up and everything. It's pumping up and everything. So let me give you an example of a trade that might have taken in the past year. Example, this trade now, this whole drop. Let me mark this out. Let me mark this out now. This whole drop. So how did I catch this whole drop? Now on the daily time frame. Sorry. On the daily time frame, right? What have I seen? Now this was a trade. I understood that price was already moving to the downside. And how was price moving to the downside? Creating a low pullback, creating a low pullback and everything. Now price came back to a lower high region that I created here. So what I did was to mark out that daily supply area here, which I marked around here. You can see how price just came back, first touch, but it came back again, then moved down to the 4-hour time frame. And what am I seeing on the 4-hour time frame? Now looking for consolidation points, right? Price actually consolidated before it dropped, right? That is just what I am basically looking for. So down to the 4-hour time frame, I just used my rectangle tool. Sometimes I like using the GAN box, so I just get 50% of everything. I just mark out that whole range and I have price like this. So now you can see how price first touched here the first time, and so it came back again. Nice. Remember, we're on a downtrend. Then on the 1-hour time frame, after I saw this, let me remove this. I think this was, I made 5% of this trade. After I saw market engulfing here, I think I entered on the 1-hour time frame because I was just looking for a normal swing position. Then I had my stops above. Yes, I had my stops above 16 pips stop, and I had my target around here. I think it was around this low here. Yes, around here. And you can see how price just drop your stop loss and just go to bed and just wait for what price you just do. And see how price just actually drops down. I already know this for my monthly time frame, weekly time frame, and daily time frame, and how I can all synchronize these things to just get a nice buyers in the markets and everything. So that's just a simple way. Okay, let me just use another example. Let me use gold for example. Gold is gold is a very, very nice pair to do it in time frame analysis, because it's actually very, very precise in the long term time frame. You can see now on the first, let's just plot out our monthly. Remember, you plot out your monthly time frame first. So monthly lows, monthly highs. You plot that out, so you already know where price is trading from, whether you're trading in the inside bar or outside. You can now see on the monthly low set, here was the support, resistance. Price tried using here as support, but unfortunately it broke through and came back to this area. Now what are we looking on now on the monthly time frame of gold? You can see that gold is approaching 1.1959.7 area, that high there. So it will not be short if price actually comes to this high and spike around this high and actually drop. It's very, very, very normal for gold. Now I have this monthly time frame analysis in my head right now. So down to this is the weekly time frame. Then to my daily time frame, that's where the whole magic happens. So you just plot out those areas. You can see something on gold. Gold actually respects broken levels and everything easily, and it moves well. So let's say for here now, what am I looking at on gold? Possibly here. This is my first target on gold, right, on my daily time frame, right, and the second target is possibly here where price actually broke through from. So now, why are you looking on gold? You just have to chill. Gold is a pair that you have to just take a chill pill and just relax for it to get to your price point. So I would love to take this area here, synchronize it with that high, so that everything can just resonate with each other, and possibly just wait for price. Now this is where the waiting game comes in place. You have to wait for price to get that precise direction, right? Now if price comes to this area, you'll be looking to short, you'll be looking to calm your guns, and you know that this is my monthly high, this is my monthly key area, this is my daily high, this is my weekly high. Price do you want to sell from this area, even if it has taken a lot of sellers or out in the market. So you just have to chill, see price get to this area, and it could take a very long while before price gets to this area. So but I have entry criteria, but that video is not today's video where I'll share with you guys my entry criteria for entering these levels. But I'm just showing how you can use intertempore analysis to like mark up your setups, and it's going to be top notch. So that'll be end of the video. If you did enjoy this content, please just give it a like, chop it up, and a comment, right? I'll catch you guys in the next one.